just got retraced right there. Make sense? Yes, SMA. So these are simple moving averages. Okay, now take a look at the 1 minute chart. My 8-period moving average and my 20-period moving average, they're rising. If they're rising, they're telling me to go long. But when do I go long? When do I strike? When you get a 55% or 100%. If you get a 55% retracement of a regular red bar, you go long. Or a 100% retracement of a neutral bar, you go long. Did you hear what I said? You go long when you get a 55% retracement of a regular red bar, you go long, or a 100% retracement of a neutral bar. Okay? Now, here, $55 retracement of a red bar. This red bar was so little, I needed 100% retracement of that bar. Here's a tiny little neutral bar. I need all of the bar to be taken out. Here's 55% retracement of a red bar here. And notice that all of these events are happening at or near an average. Okay, now somebody was saying, what about weren't there several entries? Yeah, there's several entries. We'll get to all of this stuff. Again, guys, I'm just laying the foundation for you right now. So your 3 time frames are 5. These are the ones you take trades off of. The 5 minute, the 2 minute, and the 1 minute. And you take trades based on the 55% retracement and the 100% retracement. You take trades off of, you take 55% and 100% entries on the 1, 2, or 5 whenever they happen in the but you must take them in the direction of your moving averages. If your moving averages are rising, you look for 55 or 100% retracement of red bars. If your moving averages are declining, you look to enter at 55 or 100% retracement of green bars. You always trade in the direction of your moving averages. We'll get to moving averages in just a moment. Now, let's talk about, not yet, April, not yet. Let's talk about the 3 analytical time frames. I've just covered the 3 trading time frames, the time frames that you actually enter and exit off of, 5, 2, and 1. But Oliver, which time frame do I take? Whichever time frame gives you an event. But I like the 2 minute. That's my favorite time frame. Fine, you can have a favorite, but why not take money out of the 5 and the 1? In addition to the 2 minute, increase your opportunities, increase your money. Okay, now, these are the 3 analytical time frames. These we don't take trades off of. We use them to judge the direction of the trend. We use these analytical time frames as a way of taking the tip of our forefinger, sticking it in our mouth, wetting the tip of our forefinger, and then holding it in the air. Which way is the wind blowing the hardest? If it's blowing up, we're long. If we look to go long on our trading time frames. If the wind is blowing down, we look to go short. on our trading time frames. Okay? So, the three analytical time frames are the daily chart, the 60-minute chart, and the 15-minute chart. Remember, the trading time frames are the 5-minute, the 2-minute, and the 1-minute. The 5-minute is the most important time frame. The three analytical time frames, daily chart, 60 and 15. The most important is number 1, the daily chart, the daily time frame. Now, follow me carefully here. When it comes to a time frame that is designed to tell you which direction do I trade in. Do I trade long, this stock long, or do I trade this stock short? There is no better time frame to judge that on than the daily time frame. Now, here's your number 1 rule. You will always, well, not always, for the first 12 levels of your advancement, that's levels 1 through 12. 1, you're trading 100 shares. Levels 12, you're trading 18,000 share lots, right? From levels 1 through 12, you will only take trades in the direction of the current daily bar. Let me repeat that. For the first 12 levels of your life with me, you will only take trades in the direction of the daily bar. So, if today's daily bar, not yesterday's, if today's daily bar is green, you can only play it long on the 5, the 2, or the 1. If today's daily bar is red, you can only play it short on the 5, the 2, or the 1. These are our filters, Lan. That's right. The daily is your most important filter. All right, now Hank is saying, but let's say the daily bar is big, giant, long red already. It could not go any lower. Well, who says it can't go any lower? You? Listen to me. I don't care if today's daily bar is 400 points red. You can only trade that stock short. If today's daily bar is green, you can only play the stock long for the first 12 levels of your life. At level 13, I'll teach you how to break that rule. But for the first 12 levels, that is your rule. Okay? Now, all right, good point. Let's say a stock was a solid green bar on the daily and it loses 55% or more of its greenness. Now you're dealing with an opposite scenario. All right, so yes, I understand that. But we're assuming, let's assume that the daily bar is bar number 1. Wow, powerful, solid green bar today so far. I'm now going to go to my 5-minute, my 2-minute, my 1-minute, and I'm going to look for 55% retracements of red bars near my averages, and I'm going to take them long. I'm going to ignore 55% retracements of green bars. They don't count because my daily bar is green. I can only go long. If my daily bar is red, I'm now going to look for 55% retracements of green bars on my 5, my 2, my 1 near my averages. I'm going to ignore all the buy signals because I can't go long. I can only go short because the daily bar is red. Do you understand this? Okay, Lori, what do you not understand about that? Talk to me. We don't have a daily bar until the first hour of the day has transpired. You cannot trust the daily bar until 1 hour has passed. You need 1 hour to go by before you have a real daily bar. A daily bar is not a daily bar in the first 15 minutes of trading. A daily bar is a daily bar you can trust after 1 hour. So I teach you how to trade the first hour tomorrow, right? Then after the first hour, you base your direction based on the daily bar. But I'll teach you how to deal with the market in the first hour tomorrow. Let me take it further. You are only to trade a stock long if the daily bar of that stock is green. You are only to trade the stock short if the daily bar of that stock is red. Okay? Now, you're also going to make sure you trade in the direction of the market's daily bar. Ah. Now listen to this. If the market's daily bar is green, it means that you must look for stocks with daily bars that are green, and then you look to go long the stocks that have green daily bars. If the market's daily bar is red, you search for stocks that have daily bars that are red and trade those short. The market's daily bar tells you which daily bars to look for in your stocks. Now let me repeat this again. If the market's daily bar is green, you say, oh, okay, now let me look for stocks that have green daily bars. I'm going to trade these. If the market's daily bar is red, you say, oh, bearish. Let me find stocks with daily bars that are red, and now I'm going to short these. Now, I use two market charts. I use the Spiders, SPY, for listed stocks predominantly, and I use the Qs, QQQQ, as my market chart for NASDAQ stocks. Okay? All right, Chris, let's see. Just to clarify, say after the first hour, your daily bar is number 5. Okay, so you've lost 55% or more of the green, right? In the beginning, Chris, what you're going to probably do, let's do it this way. Let's say the market, I'm going to break for lunch in just a bit here, guys. Market's daily bar is green. Now you must go into your list of stocks and find individual stocks with daily bars that are green. Let's say you find a stock, daily bar that looks like this. You get the point. Okay? Stop. Okay? Now, you would not look for a stock that was like that, would you? The market's telling you look for strong daily bars. Would this be an option? No. Market daily. No. So you're going to look for strong daily bars. Now, this is the market's daily bar. Today, this bar is still trading. This is your stock's daily bar. All right? Now, here's your 2-minute chart of that stock. Do you follow me? Now, just find an entry point. Find an entry point. But Oliver, I don't know where to enter. You do know where to enter. The next 55% retracement of a red bar, just fall in. You got this? Is it starting to make sense here? Daily bar of the market says go green. Okay, find a stock with a nice strong daily bar. Then go peer into that daily bar using your 5, your 2, your 1, and just wait for the next 55% retracement of a red bar and fall in. You got it? Now, I'm going to add more stuff to it, but that's the general approach. Guys, let me tell you something. If you want consistency in this game, trade with the daily bar. That's where your consistency is going to come from. Listen, to produce, you can't produce a daily bar that looks like this by yourself, unless your name is Warren Buffett. Okay? Do you follow what I'm saying? In order for a daily bar to look like that, some serious institutional money has to be really interested. All right? So jump on their coattails. These major institutions wish they could camouflage their movements. They wish they could enter stocks and have nothing happen. They're like elephants that want to, when they step into the bathwater, they try to tip, and these elephants try to step quietly into the tub. And while they're stepping into the tub, they are hoping and praying, I hope the water doesn't go up. But the water always goes up when the elephant steps in. If we monitor the water, we say, oh, wait a minute, the water just rose, elephants are stepping in. They don't want me to know it, but they're stepping in. And when the water level all of a sudden collapses, uh-oh, elephants are stepping out. Now, they wish they were little mice, but they're elephants. Big green bars, elephants stepping in. Big red bars, oh, elephants stepping out. You can't produce a giant red bar, can you? No, that's elephants producing that. We're riding the coattails of elephants. That's it. All right? So that's all we're doing. That's why you trade with the big boys. You trade with the institutions. You trade with the daily bar. That's all I'm really teaching you to do. I'm teaching you to trade with the major players, but I'm explaining it to you in technical terms. These major players are producing these big bars. Go with them. They will take you for the ride. Most of the time. Okay, Leo, think about it. If the market's daily bar is nice and strong and green, you're not going to consider a stock with a daily bar like that, are you? You're not even going to take this short. You can't, because the daily bar of the market says, forget shorts, look for longs. You got it? So you would bypass this daily bar. I'm not going to look at that. You're going to bypass this and say, well, Oliver, wait, what about this stock? This stock's daily bar looks like this. Whoa, wait a minute. Wow, that's powerful red. I would say, wow, powerful red bar. Red bar, I can go. This is stock number 2. This is stock 2 daily. Can I go short this? No, you can't go short this. Why can't you go short this stock? Because the daily bar of the market says forget shorts. Go long. Find stocks with strong daily bars. Forget stocks with strong bearish bars. Who cares? If the red bar retraces. Oh, okay. So now let's say you get this. You're saying, what if I get this scenario? Can I go long now? I would say in the beginning of your trading life, no. Why? Why not find this instead? Just make your odds the best that they possibly can be. Do you follow what I'm saying? Yes, you can do this one, but your odds are better here. You see? So keep your odds at the highest when doing your dailies. What if market daily is 6? Okay, yeah, market daily 6. Let's do that. Okay, let's do it. Market. Here's my market daily bar is this now. Okay, now I'm going to look for daily bars that are close to the market's daily bar. You follow what I'm saying? Does that make sense? Try to find stocks with daily bars that are similar to the market's daily bar. Now, go inside that daily bar using your 5, your 2, your 1, and fall in. Where do you fall in? 55% retraces to green bars at or near the averages, which I'll talk about soon. Now, good question. What if the market's daily bar is 4 and 9? Those are your most difficult trading environments. Good question. Did you hear me? When the market's daily bar is this, can't make up its mind. Do you follow? These will be your most challenging market environments. So now, only play the most powerful daily bars. Either way, only trade powerful green bars long and only trade the most powerful red bars short. And I take some longs and shorts on neutral days. You got that? I will take some longs and shorts on neutral days together, but only in the most powerful bars I can find. Yeah, because your market can go either way. Yes, you can take longs and shorts on neutral bars, on neutral days like this in the market, but only inside of your most powerful daily bars. Okay? What's the market's daily bar is 10. All right? You want to play solid shorts. You want to switch to solid shorts on the most powerful daily bars. It's simple, guys. It's really simple. Your daily bar is going to determine whether you go long or short predominantly. Try your best to match up the daily bar of the stock as close as you can to the daily bar of the market. Then peer inside of it in your trading time frames and get in on a 55% retracement. All right, now, guys, very quickly. Okay, when the daily bar of your stock is at or near one of its major moving averages, which I'll talk about later, it's extra powerful. So if you get a solid green bar at or near a 20-period moving average on the daily, it gives that daily bar extra kick. Okay? But you're only going to take your micro trades in the direction of the daily bar. Okay, so on this day, believe it or not, you can only trade this stock short on the 5, the 2, the 1. Because the stock was bearish. On this day, you're trading the stock long on the 5, the 2, the 1. Why? Because today's daily bar is green. Wait, these are just to show you different time frames. Where does the 15 and the 60 period come in the view? Well, the 60 and the 15 are my ways of going inside the daily chart to see how the daily bar was formed. The same way that the 1 and the 2 give me an idea of how the 5-minute chart was formed. But when the 15 and the 60 are at key moving averages, your 5, your 2, your 1 will get extra kick moves. The moves will be bigger if and when the 15 and the 60 are at key locations. And again, all of this is going to become a lot clearer as we move forward. So, when, for instance, the 15-period moving average is at or near its rising 20, extra kick. The 15 move chart is at or near its 20, extra kick. Extra kick. You're going to get extra kick in your plays if and when the 15 and 60 are at key areas. Your 60's at a key area right here. It's at or near its 20-period moving average. The extra kick to the downside, your plays are going to get extra kick when the 15 and 60 are at key locations. But you're going to trade your 5, your 2, your 1 in the direction of the daily bar. Okay. Now, I'm going to give you a break here, but I want to go over a few things here. If the daily bar of the market is bar number 2. Right now, it's bar number 2. Are you a bull or a bear? If the market's daily bar is 2, right? If the market's daily bar is 1, wait a minute, listen to me. If the market's daily bar is 1, and the stock's daily bar is 7, what do you do with that stock? Yes. Nothing. Excellent. Excellent. If the market's daily bar, right, if the market's daily bar is 6 and your stock's daily bar is 5, leave it. Yeah, leave it. Don't take it. I know it's bearish, but why not go for the gusto and pick a red one? Do you follow what I'm saying? Why not go for the gusto? Match up the color. Better odds. Absolutely. Okay? Now go inside of that stock and on the 5-minute, take that. Do you see that? You follow me? Take that on the 2-minute. Take that on the 5-minute. Take that on the 1-minute. Don't take that on a daily. Does that make sense? Match the colors on your daily, then take the 55% on your micro. All right, so guys, get this. This is good. It's a good exercise. Okay, we're going to do 3 different shapes. The circle, the oval is the market. The square is the stock. And the triangle is your micro. Okay? So, daily, the market's daily bar is 1. Okay? The stock's daily bar is 2. Follow me. Stock's daily bar is 2. Market's daily bar is 1. Stock's daily bar is 2. 5-minute bar is 10. What do you do? Beautiful. You go long. Yeah. All right. You've matched up the daily colors. Then you went inside the stock on the 5-minute and waited for a 55% retracement. On the 5-minute, this was solid red. Boom, 55% retracement of a red bar on the 5-minute. Bam, fall in. I know some people said nothing, but we're going to get it after in a minute here. Okay, let's do it again. The scrambling's up. Daily bar on the market is 7. Okay. Daily bar on your stock is 6. 2-minute chart is 5. Beautiful. All right. Okay. All right. Got another one. Got another one. Okay. Daily bar in the market is 1 again. Daily bar in the market's 1. Daily bar in your stock is 8. 5-minute is 2. Tried to trick you. Nothing. The dailies don't match. Remember, daily bar on your stock was bullish, telling you to find a bullish daily, but the bullish in this stock, the daily was bearish. Skip that stock. That's not yours today. Yeah, it's all about the colors, man. Once you match the colors, then you go inside and trade your 5-year, 2-year, 1 in the direction of that color and location. Color and location. That's it. All right, one last time. Daily bar in the market is 7. Daily bar in your stock is 9. 5-minute is 8. I like the nothings. Nothings. Look, daily bar in the market said be bearish. Now, is this bearish? It's neutral. Find something that looks like this on the daily. You'll have it. Listen, guys, the market can't be this without some stocks looking like that. The stocks going down create the market going down. You've got to have stocks that look like number 6 in order to have a market bar that looks like 7. Does that make sense? It's impossible for you not to be able to find number 6s when the market's bar looks like number 7. It's impossible. You can't have a market that drops without stocks dropping. So find the stocks that are moving the market today. That's where the elephants are. And jump on board. There you go, guys. All right, let's take a break here. It is